How's it going, everyone? It's Sam. Today we are looking at DHT, STNG, and NAT, and we're going to compare them all together. And the reason I'm doing this is actually because of a recent poll that I had where I talked about how we hit 600 likes on a video, and I want to see what you guys want me to talk about next. So we had DHT and STNG both in here, and there were a couple different stocks that got more votes, but together DHT and STNG got the most amount of votes. But I am going to do videos on Shell and Dave & Buster's. Not sure exactly when I will do that, but I was already going to make a video here soon comparing STNG, DHT, and NAT again. So I just thought I'd do that right now because I think a lot of people are wondering about it. So we're going to get into that. If you don't mind, before we start, going and hitting the like button and hitting the subscribe button, it really helps out the channel. One other thing is, if you guys want free stocks with Webull, they still have a promotion where you can get 2 free stocks worth up to $1,400 if you deposit $100. So if you want that, there's also a link in the description below. Now let's get right into it. So as you can see here, we have about 42% of people wanting me to look at DHT and STNG. Just a brief little plug for a past video. I have looked at this slightly before, but this is going to be a slightly different premise today. But this was more about why people would choose NAT over these two other tanker stocks. But today we're looking at it more from, just which one would you want to invest in? What are the benefits of each of them? And we're just going to go over it. So in case you don't know about crude carriers or about these tanker stocks, I'll just give you a brief overview. Basically, they transport oil or crude oil from where it is pulled out of the ground to where it's going to be refined. They also can store oil offshore. So that is what they've been making a lot of money on recently, because we had so much oil and there was such a low usage of it that a lot of companies were just paying them to store the oil. And they were paying them significantly more than they had been getting in the past. Now, one of the things that is important to note is the fact that those rates are dropping off right now because of the fact that just people aren't willing to pay as much to these companies to store the oil. However, they are still making money from past contracts, and they're still making pretty decent money comparatively to the last couple of years right now. There are a couple different companies that you can look at. The most well-known one is actually NAT, or Nordic American Tanker. And if we look at the stock today, they are down about 4%. They've been going down pretty consistently here. They were at $5.30. A while ago, they were all the way up at $9. Now, just looking at their fleet, they have what's known as Suezmax tankers. So they are, the second largest carrier, as I understand. They hold about half as much as the largest carrier, so they hold about 1 million barrels. They have about 23 of them here. Again, stick through because I'm going to get to comparing them here in a second, but this is just the background a little bit still. You have DHT, which is about $5.13 a share. They've been steadily declining too, but they have a fleet of the very large crude carriers, which is about double the size. The crude carriers are about double the size as the Suezmax, which is what NAT has, and they have a handful of them here. And then STNG, the last one that we're looking at today, they have about 138. So they have been dropping even more significantly recently. So I shouldn't look at 6 months because I think they did a split there. But if we just look here, they've been dropping significantly over the last couple weeks here. So comparing the three, we have to realize that all of them have different book values, all of them have different price and earnings, all of them are different sizes, all of them have different debt loads. So this is a very debt intensive business because these crude carriers are very large. Now, overall, I'm pretty bullish on these crude carriers in general, mostly to the fact that we only have a limited supply, so it takes about 2 years to build these crude carriers and these refined crude carriers and everything. So it takes a while to build them, and they are putting new rules in place in 2030. So a lot of these companies won't want to build before then because they don't know what they're supposed to build because they're putting different restrictions on. So a lot of them don't want to build right now just due to the fact that they don't want to pay for it and then have them change the rules on what they need. So the supply of these tankers isn't going up very drastically anytime soon. But let's take a look here. I compared them on several different metrics. So First of all, I just looked at the price to earnings ratio. So what is the price of the stock versus what they're supposed to earn in the forward year? So from here on out, most of the numbers that I looked at were from Q1 of this year on. So NAT has a PE ratio of 4.67, which is really good compared to pretty much every other stock in the world, but not great compared to DHT and STNG. As you can see here, DHT is significantly less, so it costs less to get their earnings, and STNG is a very low. I'm not sure I've ever seen a legitimate stock that's near $1 billion beat this low a PE ratio. So the next thing that I looked at was the price to book. So this is something that I like to look at for companies just to really know, okay, if they had to get rid of everything, how much would they be worth? And this is assuming fair market value, I assume, and all that. But it kind of gives you a good idea for what is the value of this company. So if you look here, NAT is right around 0.99 price to book. So usually 1 is really good. If it's below 1, that means you're essentially getting it at a discount to how much it costs to actually build everything exactly how it is. DHT is at 0.79, so that's pretty far below book. And then STNG has a price to book that's just 0.35, which is crazy. So they have a very low price to book ratio, which is good. The next thing to look at is the current ratio. So what this is essentially the short-term investments, the cash, the receivables, and some prepaid expenses divided by their current liabilities. So this gives you a sense of what kind of position are they in right now. So even if they can earn, I don't know, $100 billion next year, but everything's due right now and they can't refinance it, that would be a huge problem. And if they don't have any money to cover it. So looking at the current ratio, you can kind of determine what kind of position they're in right now to meet their current liabilities. Kind of like if you have a housing payment that's worth $2,000 a month and you only have $1,000 coming in this month, it doesn't matter if you make $10,000 a year from now, you kind of need it now. You need the money now. So current ratio for NAT, remember higher is better, is 1.9. DHT has about 1.58. STNG only has 0.55. So between all of their current assets, their current liabilities are almost double. So that's cause for some concern. Now I will say they have a younger fleet, so that is something that's really important, and a lot of people have pointed out in past videos. The fact that STNG has a younger fleet will help them into the future, so they've invested a lot of money recently and gone into debt more, so that way they can be positioned to be able to ride out a while without having to buy more of these ships compared to something like NAT, which has an older fleet. So those three metrics were very important and very data driven. Now the next three are more just based on my opinion. So the price potential. NAT and STNG I think have the highest price potential of these three. And the reason for NAT being in there is the fact that it's really highly shorted. So a lot of people are betting against the stock, and what can happen is a short squeeze where a lot of people are betting against it, the price happens to go up, and then more retail investors pile in because it's going up, and then those people that have been betting against the stock have to buy back in, causing the price to go up further, and it's just kind of a cycle where it keeps on going up, and that is known as a short squeeze. The other reason for NAT is just a lot of people have been watching NAT and really know NAT very well compared to, or at least have heard of NAT compared to some of these other tankers. Now, I think STNG could go up pretty drastically too, just for the fact that if they can meet their short-term liabilities, that they will do quite well because they're going to be able to earn so much this next year. And the fact that they were about $40 a share back at the beginning of the year. So if they can just get back, they have such a low price to book ratio, I think that their price could skyrocket. Now, the next thing that I want to look at was which one was the most well-rounded. So if you had to pick one of these and you weren't going for something really risky, I would pick DHT. And the reason for that is they are kind of right in the middle of everything. They're going to earn a lot of money. They have a good price to book. They have a good current ratio, so they have a lot of cash sitting around for, the short-term liabilities. So they are a lower risk play than something like NAT and STNG. Now, the last thing that I looked at was the biggest risk reward. Now, you might be able to tell us by the 2 questions above that I think NAT and STNG have the biggest risk and possibly the biggest reward. Now, that being said, I'm not a financial advisor, I'm not a professional, so do your own research on this. But that is kind of my comparison of the three metrics that are just data driven, and then 3 that are more based on my own thoughts. So hopefully that helped if you were wondering about DHT and NAT and STNG and how they compare. Let me know in the comments what you think. Again, thank you for signing up for Webull down in the description and hitting the like button. And I look forward to talking with you in the next video. I will see you in the next one. Bye.